All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Before we begin, make sure to hit that like button if you like these videos, turn on notifications, and make sure to subscribe. Appreciate it as always. Let's go ahead and get started around the horn. We got a lot of things to talk about. Dow futures up 222 points after yesterday's flush. NASDAQ up 1% this morning on the future side. S&P up 0.74%. 47.84. The Russell is up about 1.11%. 10-year Treasury yields are down 3.845%. The dollar is down 0.5%. 101.91 below 102. 13.52 for the VIX. That's down about 1%. Crude oil is down about 1.4% at 73.23. There was a headline out. I don't know if this is the reason, but Angola is leaving OPEC. $2.15 for gasoline futures, down about 2.34%. Gold is higher, thank you dollar, 20.53, up about 0.3%. Silver is down after being green yesterday, 24.52, down 0.43%. Near $4 on copper, $3.92, up 0.41%. And the reason I talk about copper is because of the top 10 stocks 2023. We talked about copper then. Euro dollar is up about 48 pips, 109.92, flirting with that 110 level. 142.18. Dollar yen collapsing, down about 138 pips this morning. Dollar Canadian dollar 133.25, even with oil being down about 41 pips. 126.85, up 45 pips for the pound dollar. Bitcoin is at 44,400 on the future side, up 1.76%. Ethereum up 3.27% at 22.61. Good morning, everybody. Okay, let's go ahead and talk about the elephant in the room. What the hell happened yesterday? So I went ahead and did some research yesterday. I posted this on the blog so we can go over it together. UBS trader Andrea Semaneco, I'm going to ruin that, also chimed in and wrote, after the dust died yesterday, the SPX started another calm rally morning, turning into a random over 1.5% sell-off with a bid to volume falls and a lot of confusion on Wednesday. Any guess seems as good as another, with speculations of market getting too long, macro comments in the Middle East, zero DTE options print, and many others. In any case, this unexplained move with volumes 8.5 is wild. The day closed with term structure flatter, skew unchanged, and volumes up. So what drove the selling? As Goldman Washington explains, while we have seen passive selling over the past few days, quote, it clearly is not enough to cause such a swift reversal intraday, end quote. Looking at S&P minis, most volumes started printing after 2:30 p.m., even prior to the break of 4,800, and the pickup in the volume was real. The average run rate of over the 45 minutes following the initial move was 5 times greater than in the cash session. So why the sell-off today? Again, you can see the image there. Continued. According to the Goldman trader, there were a few headlines floating around as potential reason for the sell-off. Most notably, Graham will draft pre-Taiwan invasion sanctions against China. The more likely trigger is the massive zero DTE, 0 days to expiry put trade, which almost traded at 80,000 contracts at the SPX December 20th, which expired. So again, that's already done with. 47.55 puts that caused a short gamma hedging sell-off after last Friday's triple witching OPEX, and thus the market especially unstable to sharp sudden reversals. Whatever catalyzed the selling, however, the result was a painful one to the bulls, expecting an all-time high in the S&P today, to wit the biggest selling program in the NYSE, the New York Stock Exchange, since July, and one of the biggest in years. This is the picture of the sell program. Hedge funds did step in late in the day and covered some shorts around the edges, with consensus shorts trading down about -4%. So again, that's where we are. Too long didn't read. This market fall happened due to some big put options placed on the S&P 500, and the machines ran with it, and it cascaded through all stocks. That was the real big tell, was that it just wasn't one stock. It was everything. Everything fell all at once. So this is what happens when you commoditize stocks and you start building ETFs. You put everything in a sense that everything's created as contracts, insurance, and here and there. Kind of similar to the 1987 crash with portfolio insurance and that sort of thing. You cascade over and over, but it lasted for a little bit, but as you can see, we're bouncing. And here's Citibank saying, Citi strategists warn of U.S. stocks pullback, but say buy the dip. So just to give a little bit of context here, 1 week gone in 120 minutes. Quote, between 2 p.m. and 4 p.m. today, the S&P raised $600 billion in market cap. The average run rate of over 45 minutes following the initial move was 5 times greater than the earlier cash session. To put this in perspective, the S&P 500 added 600 billion of market cap over the last week. The index was up 10 straight days, but it erased 5 of those daily gains in 2 hours. This is the old escalator up, elevator down, and that's what happens. And we also got this vilified 0-day options blamed by traders for S&P decline. Again, everything just keeps going back to that kind of big SPX put option as we went. I had a question here, Masterclass. Thoughts on getting BA at the open? We will see how we open, and we'll go from there. Again, we have to take a look at the open and see what happens. Economic calendar, we just had GDP. The GDP number, let me get that for you. GDP quarter over quarter, 4.9%. Estimate is 5.2%. GDP price index, 3.6%. Personal consumption, 3.6%. That all met expectations. Core PCE, personal consumption expenditures, quarter over quarter, 2.3%. This is the Fed's preferred measure of inflation, and that met expectations. So there we are. Initial jobless claims, 205,000 versus the 215,000. And again, that is still a strong labor market. Boeing set to deliver first Dreamliner to China since 2021, according to Reuters. Quote, Redfin has seen double-digit and annual increase this week in homeowners contacting its real estate agents for help selling their homes, and new listings are up 9% from a year ago, the biggest annual increase since July 2021. And Apple's AI research signals ambition to catch up with big tech rivals. Apple's latest research about running large language models on smartphones offers the clearest signal, yet that the iPhone maker plans to catch up with Silicon Valley rivals in generative artificial intelligence. There we go. So let's go to the charts. I went ahead and went on the radio this morning, and we talked about Nick scalped with the team. We talked about the fib levels and what we're looking for. Again, this is the S&P 500. Big level to break is going to be 4,800. That's probably going to be kind of that resistance. That's what we got to break. Probably a big supply level in terms of, where the market's going to go. But we're going to use that as our resistance. If we break above 4,800, then we expect to fully retrace 4,830. The question is, does it happen today, which is very possible, with a short squeeze, or tomorrow by end of the week? We went ahead and wicked 47.94 on S&P 500, pulled back a little bit. We're right below the 50% retrace. We will see how we open. But if we take a look at the NASDAQ, which is performing better, we're getting closer to the 61.8. We broke above it. The idea is to get above 17,000 as well. So again, it's going to be a wait and see approach, but we're seeing stocks starting to bounce here in a little bit. Morning, Carlos. Can we look at Netflix? It hit the 61.8 monthly retracement. I'm in a short position until March. Let's take a look at it. Netflix hit 500 and then pulled back. Okay, 61.8 fib. Yep, there you go. We tagged it and pulled back. Most of this was probably due to that 0 DTE options. If you're looking for continuation, which I am, I think Netflix gets up to 585 by next year. All-time highs would be a little difficult by next year, again, if we get a lot of help, but that would be my target here, 585. Continue forward. You can use the 20-day moving average as 422 as your target if you are short, or you can use that as your support moving forward. So again, the idea is clear 500, 495 or so. We're at 493 currently. This is going to be your money line, 585 by 2024 next year. So if you want to short, that's one thing. You can kind of scalp it, but I still think Netflix has more room to run. Now we're getting actual mergers and acquisitions with Warner Brothers and Paramount. So again, starting to see a kind of consolidation in the streaming space as there's so much competition. We will see how that affects Netflix, which has the best market share of streaming and has been one of the better performers out there. So we'll see how the market runs today. Netflix is a part of the Qs. So if the Qs go higher, Netflix should run higher as well. How do you know that the S&P erased 600 million market cap? How do you check? It was 600 million or 600 billion. This was from Bloomberg. So 600 billion in market cap. Again, this was a note from Goldman. So that's the really only way is to read the news on that end. I'm in the same calls, Ben. I agree with Carlos, 585. Not by end of the year this year. No. End of the year next year, 2024. Not in 2 weeks. No. Maybe close to that expiration. Yeah. So yeah, you could obviously pull back. I mean, like I said, depending on how December ends, is how January will become. So if December is very strong, the Santa rally, the whole nine, which is technically starting tomorrow on Friday, we'll see how January runs. I would expect some profit taking in the first quarter of 2024 as everyone starts the new year and preparing. So we'll see what we get. Oh no. So that's where we are in terms of the market. A lot of stuff happened, but we just have to see what happens. Again, what happened yesterday was really an anomaly at the end of the day. It wasn't really justified by any real headline or fundamental analysis, even technicals, because we broke all-time highs. On the future side, SPX still has more to go, as we know. But on the future side, all-time highs were already above. So after you break all-time highs, guys, there's no real resistance mark that you can use unless you're doing Fibonacci extensions, fair. But there wasn't really anything out there that would have caused this kind of reversal on a fundamental basis. Again, the melt up was continuing. Sometimes we get pullbacks. Yes, I know, a little crazy, but that's just the reality, guys. Sometimes it just rains. That's it. So the idea now is to see if the bulls buy this dip. Citibank's already saying buy the dip. We'll see if that continues. Remember, whoever traded those contracts, that was expiring yesterday. So there's no carryover unless they rolled it over. I have no idea. But the assumption is they probably closed up. So we'll probably get a bounce back here, a little volatility, as the VIX is only at 13.5. Not exactly, you know, the world's ending either. So again, 4,800, 17,000. That's kind of our lines in the sand of what we're looking for. And remember, we still got tomorrow. Tomorrow we have the consumer confidence report from the University of Michigan, consumer sentiment. So we'll see if that gives us anything. We'll see how the price action is today. PFE, I hope it gets to 21 to buy. PFE, Pfizer, will be one of the names that I'm thinking of putting in the top 10 stocks of 2023. Again, a name that has been absolutely beaten to hell. You're right at the area, guys, of the COVID lows. So if you want to take a little time machine, if you're a Pfizer investor, and go back to March 2020 or May 2020, not bad, not bad. Does it get to 61? Well, we need another pandemic, let's just say, and I don't think we're going to get one. So a bounce, yeah, I think there's opportunities in a name like Pfizer, to be completely honest, especially if you're taking a look here at the COVID lows. COVID lows, that's a big deal. Let's see if I can draw a line here. Right there. Let me see if I can kind of visualize this even easier. All right, we'll connect to the right. There you go. You zoom in a little bit. Now we drew our line, and you could see pretty good support bounce there. I like Pfizer. More than likely, we're going to put that in the top 10 stocks of 2023, so be ready. 21 on Pfizer, that'd be nice. That'd be a hell of a discount. Hell, you're getting a discount now. I don't think so. I think this support does hold on Pfizer, unless we get some really horrible news, which I can't really predict, because I don't know what would it take for Pfizer to come back more than it already has. So we will take our time step by step, of course. And I'll get all that videos out to you before the year starts, so we can be prepared and make it 2024 great. We're going to fucking kill it. That's for sure. Sorry for cussing. All right, guys, we'll go ahead. Do I have shares? I don't have shares of Pfizer. No, sir. I traded Pfizer puts this year. That was pretty much the extent of it. There was better opportunities out there than just buying Pfizer. For example, Palantir, DraftKings, and those names. Mara. I didn't buy Mara, but I traded Mara all this year. So far, so good, and we'll see what we get moving forward, and we'll just take it step by step. 4,800 is my target today. 17,000 is my target on NASDAQ. We'll see if we break it, and then we will go from there. So I wish everybody a very happy Thursday. Tough yesterday at 2 p.m., post 2 p.m. Yesterday. But again, sometimes it rains. We've been here before. Crazy things have happened. Let's dust ourselves off and see what we get moving forward. Okay, guys? I did get into Boeing yesterday with Masterclass and the radio members. So a lot of people have been asking me, hey, do I get into Boeing? Let's see how we open today. I have 270 calls, and that was part of the watch list this week from the blog. So we'll see if we get that continuation higher. Maybe we get in the money today. Fingers crossed, right? Have a great rest of your morning. I will see you guys on the Discord as well. So if you are interested, make sure to take a look at the description below and get access to our free live market blog. It's free for everybody. It will always be free, and we hope to see you there. Have a great rest of your Thursday. Cheers.